over the weekend. Geopolitics, of course, just another added, I suppose, bit of information that the markets have to grapple with when they were already on edge and very nervous about the AI disruption fears and some of the credit risks as well, the cockroaches. Just talk us through your thoughts this morning.
Yeah, thank you for having me, Sam. You know, I will say that at the beginning of the year, we definitely highlighted geopolitical risk to our investors as a big concern, not only because of the midterm elections, but because we saw sort of the armada being stacked up in the Middle East, in the Strait of Hormuz and all of the surrounding areas of Iran. And so we definitely thought that escalation there, especially after the October events and everything that happened at the end of last year, were, you know, really very apparent that we could have some escalation as of last year. And so energy rotation has been wonderful. Obviously, the biggest issue that's really affecting European markets, we're getting off really free so far, Sam, with this, because we're just a little bit down, less than, even 0.25%, whereas Europe and obviously Asia experienced a 1.5% to 2% decline. So we're so far not really impacted by the LNG, the Jones Stark, Qatar Energy shutting down that plant that does have a direct impact on 20% of the world's liquid natural gas supply.
Okay. So as we look across the board today, energy higher, defense higher, which is typical in a market like this, given what we've heard over the weekend, travel down. What do you do in this environment? Do you buy the dip or do you just wait a little bit? And then if you wait, what sort of indicators are you looking at to then sort of make a move?
Great question, Sam. So I will definitely say that we want investors to stay invested, but obviously risk tolerances kind of pull back. Maybe we're not as risky when we're potentially in the middle of a global war, certainly a global war that involves the supply of energy to the world. So people do get more risk adverse. And what was really interesting, if you looked over the weekend, you saw first a rotation into treasuries because people were doing, a safety flight. So you really saw the yield getting depressed and pushed down, obviously way below 4, which it was really shocking how low it was going. And then after it really escalated, Sam, what you noticed was that treasury yields started to come back up, because what ends up happening is people start to think, okay, now we're going to have an energy crisis, we'll have an inflation problem, and that kind of over trumps, if you will, the fact that treasuries are seen as a safe haven asset that people rotate into when there's these kinds of disruptions. So what I would say is you probably can't rely on treasuries as your stalwart go-to. We see obviously silver being upset this morning because of the industrial side of it, but obviously gold coming up as a commodity, as a safe haven asset. So I would say silver and gold are the same, and we need to really look at those as holds. But obviously energy policy, what happens with energy and treasuries is going to be very dependent on what happens and how fast this conflict gets resolved.
Obviously we've seen a huge amount of valuation compression in recent weeks, particularly with respect to technology. Just as we had started to perhaps see signs of some meaningful recovery there, people sort of trying to distinguish which ones were going to be the winners and the losers amongst the SaaS-pocalypse as well. A lot of people looking at, picks and shovels as part of that trading theme. I'm just wondering, what a story and the geopolitical risk that you speak of in these markets does for some of that recovery story when we look at the forward PEs.
Yeah, so you can see easily right away this morning, Sam, the winners are obviously the military industrial complex, Palantir being a part of that as on the intelligence side. So that's why Palantir is up there with the Northrop Grumman's and all of those others that are actually developing weapons and creating them. So, I think that there's always short-term winners here when you've got military conflict and military escalation. But we have to really realize that to your point, we are in the backdrop of the fourth industrial revolution and the beginning understanding of the monetization impact of AI on different sectors. And obviously you mentioned software as a service or a subscription model. And so SaaS, all of these things, the answer to give investors the direct answer, you're right. This is all of these industries that we've seen routed in the last 6 to 8 weeks are going to be completely disrupted as AI completely changes the way we do everything. But Sam, it's not tomorrow. It's not this year. It maybe is 18 months at the fastest, 36 months. These are things that are going to take time. So the disruption is real, but it has been overblown. Stocks and industries have been routed, oversold, and this is a great time to pick up some winners at the dip and to make some money on the short term.
Okay, and Rebecca, very quick answer for us. When you see energy and defense names up, like some of those that you mentioned, do you jump in or do you wait to see how things go over the next coming weeks and days?
We definitely have made a rotation into energy since October of last year and see that the conflict will continue to give it a runway for at least the next several months, for sure.
Always great to have you. Thank you so much for your thoughts this morning and your reaction to what is unfolding here in the markets. Rebecca Walser, President Walser.